Glad to again be here with Kevin Onizuk, Alcova Mortgage, and I'm John Polson with the Memory Group here in Williamsburg. Your real estate professional, Kevin, is here to talk a little bit with me about mortgages again this morning. And, Kevin, you and I do this quick little talk before we get on this call. And, we do discuss a little bit about what's happening in the general market with interest rates. We know that interest rates are higher than they have been. We had some shifting that's happening in the markets and everything. So this morning, I feel like you've got some amazing stuff that you can share regarding some, I don't want to say unconventional, but you'll have the right words to describe the types of programs that are really effective for home buyers now. Of course, what we are here to do is provide information and education for the community, particularly here in the Williamsburg home buyer market, and helping individuals that are looking to buy or sell homes here in the Williamsburg area, and providing information that will help them avoid costly mistakes, making the transition and the transaction as smooth as possible, working with professionals that can help guide them through the journey. So tell us a little bit more about what kind of things are available and how a home buyer might be able to put some of this to work for them.
Yeah, actually, John, I love the word unconventional because a conventional mortgage is one of the most commonly used. Conventional mortgages backed by Fannie Mae, Freddie Mac. We have FHA, VA, USDA, all kinds of acronyms, but it's really just the standard basic mortgage programs that are used every day for folks purchasing or even refinancing a home. But outside of those traditional government-backed programs, there are other alternatives for people who just don't fit in the box. Those all government-backed programs have very set requirements and guidelines on income, what income we can use, what income we can't, right. Assets, who qualifies. So there's a lot of rules that not everybody fits into those boxes. So outside of that, there's a lot of programs that have that left the market for a little bit during the pandemic, but they've now all come back.
Yeah,
there's a lot of outside the box opportunities. Just wanted to go over some of them, just a few that are available for folks. Let's see. Let's start with ITIN programs. That's really popular right now. That's for folks who may not have an official legal immigration status in the United States, but they do not have a social security number, but they have a tax ID number. They haven't gotten their social security number yet, but they got their tax ID number. They can actually qualify for a mortgage to purchase a home. Okay. Foreign national programs. If you are a foreign national here in the United States, or even a United States citizen abroad, but primarily it's for folks who are visiting, staying here in the United States, and it's for homes purchased in the United States. There's programs for that. We have investor cash flow loans. So if you're looking to purchase a home and you've got some cash to put down, but maybe your bills versus income, we call that debt to income ratio, doesn't quite work out on the affordability side, we've got programs where we're just going to look at the cash flow of that property. If it works out where the estimated mortgage payment is maybe $1,000 a month, but you're going to show plenty of income to cover that. So say it's going to rent for, $1,700 a month, just making up some numbers. We will use that to qualify the cash flow of the property. If you're looking to buy an investment property, you can buy it as an LLC instead of buying it just in your name. The traditional mortgage programs require you to have the mortgage in your name as a person. Some of the non-traditional programs allow you to buy it in an LLC as a business. And investors like that because it can give them some additional protection against lawsuits, getting in trouble, etc.
Absolutely.
Yeah, some other ways to help with income. A lot of these are very income based. is we have programs with asset qualifying. So we're going to look at your assets. Let's say you have someone who, great, well-qualified individual, has $1 million saved in the bank in retirements, whatever, but just started a new job and it's mostly commission-based. Your traditional mortgage programs won't allow you to use commissions and bonuses and such for 2 years.
Yep.
This program will allow you to use those assets. We amortize the assets over the mortgage period, and we can use that to help qualify. For self-employed people, there's a bank statement program. You still have to be self-employed for a minimum of 2 years, but a lot of self-employed folks are use very, I'm sure, legal means of reducing their taxable income, which is great because you pay less taxes, but then you don't show as much income for qualifying for a mortgage.
Right.
With a bank statement program, we look at your deposits into the bank account, and then we use a percentage of that. We still allow for expenses and such to qualify. And there's a 1099 program where we look at the 1099s, not necessarily at the tax returns that would show all of the expenses and hits to the income. Let's see, non-warrantable condos. That's a big one. Condominium associations are considered non-warrantable if they don't fit into the guidelines of, say, a conventional mortgage. When someone purchases a condo, we have to approve them and the condo association. And it can be even little things. Like here in Williamsburg and Newtown, some of the condo associations don't qualify because they are mixed use and there's slightly more commercial space than residential, and that's just not allowed. So it would have to go to one of these special programs. Let's see, condotels. There's some of those in Kings Mill. They are considered a condotel where you purchase a condominium, but they're run as a hotel with a front desk, et cetera, or folks can rent them out. That's also a unique program. So there's lots of stuff out there for folks that don't fit into the box. And it's not like for those who've been around for a while, the crazy subprime days. We're still going to make sure that folks qualify. We're still going to make sure that they've got decent credit, and we're still going to make sure that they've got some money to put down on these. You've got to have a couple bucks to kind of reduce some of the risk of these non-traditional mortgage programs. And if you don't have great credit, or actually, let's say if you don't have credit at all, we still have programs for that too. If you are a Dave Ramsey follower and don't use credit at all, just don't have a credit score, don't have a history because you pay cash for everything, there are programs for that too. So yeah, if you don't fit in the box, don't worry. The box is bigger and there are other options out there.
Okay. That's a lot. I mean, there's a lot of programs that you're talking about there. I certainly heard a common theme that, of course, a broad spectrum of themes in there, but self-employed and individuals that are receiving commission type incomes which include real estate agents, but real estate investors and a lot of folks that might be contractors and that type of income. Yeah, you're right. It's when you own a business or an entrepreneurial venture, then your income doesn't look the same as it does if you're a W-2 employee. Certainly there are advantages to owning a business in terms of tax benefits, but you also have a lot of obligations that are part of that, and there's risk and so forth involved. So I got a question for you. You obviously do a lot of these types of loans. How many is there a perspective on how much of your business do you suppose might go towards individuals that are self-employed and fitting into some of those categories versus the W-2 type employees that are the more traditional, easy income kind of documentation and stuff like that?
The vast majority definitely goes into your traditional mortgage programs. If you can fit into the box, and if we can get you into that box, it's definitely going to be more affordable. Your rates, costs, even down payment options are going to be lower. these are just for those who don't fit. And, as you mentioned, we could probably put it in categories where these help the most, and that's self-employed folks. That's where you have your biggest challenges, real estate investors, and then folks who are, have citizenship or visa challenges or foreign nationals or something of that nature. That's really kind of the three big buckets where we see opportunities for these non-traditional programs, but they are becoming a bigger piece of the pie for sure.
Okay. I'm curious. So I have questions. We could probably do a whole nother series on each one of these, perhaps. I had a real quick question just because it came on my mind because I was in an investor group meeting last night here in Williamsburg. The income-based asset qualifying program. What kind of how does the lender look at the income from that asset? So you'd mentioned a scenario where maybe the mortgage is going to be $1,000 and the income was 1,700. Is it 70% of that income? What's like the percentage of, not to dive too deep into it, but kind of
right.
Overall.
Yeah, just regular assets, we'll use the full value. Retirement assets, we usually take a percentage, 70, 75%, because if you tap those earlier, you typically have to pay taxes, have penalties, etc. We are assuming that they're not going to tap into those, just they could. And generally, we just take the value of the asset divided by the loan term, just as a rough guideline. So if you're getting a 30-year loan, then we take your assets divided by 30, and that's how much we can use for yearly income.
Okay. How about how about then from the investor cash flow loans on the type of investment? I think that's the one I was actually looking for, that specific question. But so that income producing property, how much of that income can you count towards the qualifying ratios for that type of thing?
It can depend a bit, but for most rental properties, no matter what type of program it is, if it's not something already claimed on taxes, et cetera, we'll use about 75%.
Okay.
That allows for expenses, vacancies, et cetera.
Okay. Yeah, that's
well, in this market, you don't really have rental vacancies anymore.
Yeah, right. So that's a pretty solid number. And I would love for people to be considering at this time, particularly in the way this market is shaping up. We're in a transition, sure, and there's a little bit of shock that's happening in the markets with a little bit of setback from interest rates and so forth. But there are all kinds of opportunities, and I think we're going to see more and more opportunities, whether it's for investors or for your traditional home buyers. So there's going to be lots of real estate opportunities for people in this time as we go between now and 2023, 2000. This is a great time to be involved in real estate in one form or another. And I think that there's going to be some really terrific opportunities. There's all kinds of questions that people are asking about the timing in the market. And it's just never a good idea to just try to time the market. People that try to time the market usually don't win. And that's because there's so many factors that change all the time. So if you're looking to buy a home, do it based on your factors that are important to you. If you need a home, now's a good time to buy a home, because waiting could be costly. And if you need to sell a home, now's a good time to sell a home, because your life doesn't just wait for conditions to be perfect. And how much can that situation change in cost? And market prices aren't really. We are having oh gosh, we'd have so many conversations about this as we keep seeing these shifts in interest rates and inflation numbers and all this. There's this anticipation of a market crash, and it's just not happening. The conditions for a market crash just are not there. We're seeing a flattening of home prices. There are some overpriced homes that are not selling. They're not selling well. They're not selling fast. They're making some price reductions because they overpriced the home, but homes that are priced right are still selling very well and very, meaningfully in the marketplace. And that's going to continue. So I was just reading through some Case-Shiller studies this morning that are projecting that really home price valuations are going to continue to grow just at a slower pace over the coming year. And Virginia is actually in a market where our growth is looking to be in that close to 5% range of appreciations over the next year. That's a significant reduction from the 15-20% increases that we've been seeing. But that's from a confidence standpoint in the marketplace. I want to hopefully be able to convey that to individuals that are trying to make a decision. Is this the time for me to do something in real estate? And with your programs that you have available, Kevin, obviously there are options that give some creative, opportunities.
Absolutely. Yep. I was just at a meeting with some pretty high-level financial advisors a week or so ago, and they were saying now's the time to be buying back into the market, buying back into the stocks, because everybody that tries to wait for that bottom always miss it. Yep,
that's a great point. Yeah, we've I know I got to let you get back about your day, and I love that you shared this information with us this morning. Thank you so much for that. Real quick though, before you go, did you know why the cop pulled over the U-Haul truck?
Why is that?
He wanted to bust a move.
Hey, I have a timely one for you.
Yeah.
Why is it so cheap to throw a party at a haunted house?
Why?
Because the ghosts bring all the booze.
All right, right on. All right, well, hey, we're halfway through the week. It's Wednesday, and let's move towards the weekend with helping as many people as we can. Thank you, Kevin, for joining me this morning. If you want to reach Kevin and you have a mortgage question, he's your guy. His contact information will be in the link in the description on the video, and you're certainly welcome to reach out to me if you have any real estate related questions. We serve home buyers and sellers in the greater Williamsburg, the Peninsula area. Kevin with Alcova Mortgage right here in Williamsburg. John Polson with Memory Group right here in Williamsburg. Love to have you come out and visit. We do have, I wanted to mention this, I do have a special thing that is very close to my heart. I have, close in my family, we have some issues that have affected, mental health but whether it's dealing with depression, anxiety, and so forth. My kids have been through a lot, and I support a local organization called NAMI, and that NAMI organization is something that helps a lot of family. NAMI stands for National Alliance on Mental Illness, and we have a walk this coming weekend as a fundraiser. It's actually in the Bicentennial Park on Saturday morning, and I have a fundraiser that's on my Facebook page, and would love to have more support because there's a lot of families out there that really need help in this kind of it's been a tough season these last couple of years with COVID, whether it involves school and kids and teenagers. A lot of families have had really just a lot of things that they've had to deal with, and mental health is just something that it affects all of us in some form or another. And particularly in the last couple of years, we've had a lot to deal with. Right now, there's a lot of traumas that are happening in the world, and even just the weather this past week has affected a lot of families. So, it's important that we have services, and Williamsburg, James City County has some amazing support systems and services that are available, but they are all taxed out. It is really, really difficult to get help. It's there and there are resources, but those resources need our local assistance as well. So anyway, there's my plug for that. And the NAMI walk will be this coming weekend on Saturday morning. Love to see anybody that can join us in. There's a fundraiser on my page. So with that, I will let us jump about our day. Kevin, thank you so much for your time this morning.
Thanks, John. Have a great week.
All right, you too. I will talk to you again soon.
Sounds good.
Thanks. Bye.